Hi Ledges. After I presented last week's statistics, I had so many questions on the process by which I collect these statistics that I was actually quite surprised and decided to make it the basis of the session today. So the first thing to understand is that I collect all my statistics by hand, and that literally means going back on the chart, looking at occurrences of certain patterns and then entering it into Excel. But of course, to do it this way is time consuming, and there is also the possibility of human error, which is something quite important to understand. Now, to try and combat human error when you're collecting statistics yourself like this, it's quite useful to focus the time that you spend doing it to certain periods. So, for example, I try to spend 60 minutes a day, 6 days a week collecting statistics on certain things. That might mean that it might take me a week to come up with something as simple as the statistics that I presented to you last week on inside weeks in the New Zealand dollar. But the advantage of doing that is it means that I'm not staring at the screen for too long, which means that I lose focus and therefore increases the likelihood that I might make a mistake in the gathering of the statistics. And the second thing that I like to do is to share statistics with people and invite feedback on them. I have a few traders in my circle that are also interested in gathering statistics, and oftentimes what they will do is I will present them with something and then they will actually go ahead and they will double check it for me. And of course the process works in reverse. They might present me with something of interest and I'll go ahead and check it. And that's actually very useful because it's another pair of eyes that's looking at the same thing that might notice any mistakes you've made. Now, when somebody else looks at the statistics you've presented, they might come up with different results because sometimes the data can differ between brokers, for example. But generally, you will get an idea if you're on the right track. So if I say the probability of inside week failure working on the New Zealand dollar is 41%, and you come back to me and you say, well, I found it's 43%, then it's not going to make a marked difference to me. If, however, you come back to me and you say, well, I found the probability is 60%, then obviously I want to go and double check my results very carefully. And of course, on that note, so might you. Now, in terms of how I come up with my ideas of what I want to gather statistics on, they usually come to me just based on something I've read or something I've heard somebody speak about or something I've even seen. So when it came to inside weeks, I remember reading on a forum a long time ago that it was a profitable strategy to trade with the break of an inside week. So if we break the high, to buy and to put your stop on the other side of the inside week. And that got me thinking. Now, it doesn't necessarily mean that I'm going to test out that strategy, but you could do. You might think, well, if it breaks the high of an inside week, does it go at least 1 times the length of the inside week before it hits the other side of the inside week? And therefore, you might start to get the basis for a strategy. But when I started testing them, I started looking at what was the probability of a close beyond the extreme, what was the probability of it breaking one side and then trading to the other in the same week, and certain things. And the statistics I gather are basically based on what I'm interested in. But the first thing that I do is I have an idea of what I want to test, and then I mark out the occurrences of it. So for example, going back to the New Zealand dollar versus the US dollar in inside weeks, I pull up the chart, put it on a weekly time frame, and then I go ahead and source all the inside weeks and I mark out the week where they broke. So for example, you can see that the most recent one was this one here, and the week that it actually broke one side of the range, I have marked it, and I've marked it with a down arrow because it was bearish inside week failure. I did also mark it with a down arrow if, for example, we break the low and keep going, like here. If it's bullish inside week failure, like here, then I marked it with an up arrow. But again, I could also mark it with an up arrow if we break the high, close beyond it, as we do in this week here. And then I've put a cross if it's broken both sides of the inside week. And then what I'm going to do is I'm going to save it by right-clicking on the chart, going to template, save template, and just giving it a name. Okay, so I might call it, for example, New Zealand dollar, US dollar, IWS inside weeks. The reason I'm going to save that template is so that if I come back to it at a later stage, I know all the occurrences of the pattern that I've already marked. And that might help me because I might be looking back through the chart and I might think, for example, aha, here's one that I didn't catch. And in actual fact, this actually does look like one, but then when you come to look at these lows, this first low is 74.56 and this second low is 74.54. So this is actually not an inside week because it's 2 pips lower. And yes, I am being pedantic. Now, incidentally, I have a folder on my computer called Trading, and everything in that trading folder is related to my business. Now, within the trading folder, there is subfolders, and one of those subfolders is statistics. And within the statistics folder, there are, again, a number of subfolders with every single market I trade. And one of those will be the New Zealand dollar, US dollar, and this is where I would specifically save the template to, along with the Excel sheet for inside week failures. So let's have a look at the actual process of gathering it. What I'm going to do here is I'm going to go right back to 2007. So I like to try and gather 10 years of data on something. That can take a long time to do, but I try to do it. It means that you're going to get a significant number of occurrences. Now, I have many different statistics that I've gathered, and the Excel sheets often look slightly different based on the things that I've gathered. So when it comes to, say, inside weeks, I have a kind of standard template for them, which I'm going to bring onto the screen, and it will be empty and then it will populate as I fill it in. Now, obviously, when you're doing this, you want to fill in some of the things that you're collecting. So up here, I'm going to remind myself what the study is. It's on New Zealand dollar, US dollar inside weeks. And some of the things I want to look at. So I want to know how many times the market breaks the high or low of an inside week. And you'll see that that cell has a formula which you could copy, which basically counts if the word New Zealand dollar, US dollar appears in the column A from the cell 12 where it starts all the way down to cell 1000. So it's basically just counting the number of occurrences for me. I want to know the probability of a close beyond the extreme. So basically, if it breaks the high or the low of an inside week, is it likely to close beyond the extreme? Then, of course, I'd like to know the probability of failing to close beyond the extreme. And then I'd like to know the probability of breaking both sides in the same week. Now, I know that if we fail to close beyond the extreme, and we haven't broken both sides of the inside week in the same week, then we're going to have inside week failure. So I want to see how many occurrences of inside week failures we get. And because I use inside week failures as a bias, the probability of inside week failure working. Now, again, these are just the specific things that I'm interested in, and you'll want to collect your own things. But now we'd go through and we'd start looking at occurrences. So the first occurrence that I can see at the beginning of 2007 is this one here. So here's the inside week, and then the week that breaks it is this one. So that's the week of the 11th of February 2007. So I'm going to put in 11th of Feb 2007. Now, the first thing I'm interested in is, well, does it close beyond the extreme? So up here, does it close beyond? Let's just put, and the answer is yes. It does close beyond. As I did that, you'll see that this jumped to 100%. The probability of a close beyond the extreme is 100%. And the reason for that is there is a cell over to the right that is registering the number of times it closes beyond the extreme. And if I click on that cell, what it's doing is it's counting it if there is a yes in the C column. So if I scroll back and make this a little bit larger, and this is not a lesson on Excel incidentally, but just so you can get to see what I'm doing, what that's doing is it's taking all of the cells between the top one here, C12, and I've gone all the way up to 1000, just so I can go forward for plenty of time in the future without having to worry about updating the formula. And if it's a yes, then that means it does close beyond the extreme, and it registers it over here. Now, up here, the probability of a close beyond the extreme is taking that figure over here, which is cell X5, and it's dividing it, as you can see up here, by E4, which is this. So the number of inside weak breaks is 1. We failed to close beyond the extreme, and therefore 100% of the time we failed to close beyond the extreme. These formulas are not too hard to work out. You can just basically use Google. It's very, very helpful. Now we want to know next, if it was inside weak failure, would it be bullish or bearish? So I'm going to put if inside weak failure, was it bullish or bearish, so we can register the occurrences of that pattern, and if so, was it a winner or a loser? Now this wasn't, so we're just going to put NA in both of those. Let's go on to the next occurrence, and the next occurrence is this one up here that we can see that's marked on the chart. That's the 17th of June 2007. So again, 17th of June 2007. What happens here? Does it close beyond is the first question. Yes, it does. Sometimes you actually have to look at the figures because it looks pretty close, but you can see that the high there is 76.32 and the close is 76.39 of this week. So it does close beyond, which is a yes, and it's not inside weak failure. So again, we have an NA here and here. Now let's continue moving on to the next one. Now this is the next one, 26th of August 2007. Okay, 26th of August 2007. Does it close beyond? Well, it breaks the high and it doesn't close beyond. So the answer here is no. So it is an inside weak failure. If it's an inside weak failure, is it bullish or bearish? Well, this is bearish because it breaks the high and closes back within the range. So this is definitely bearish, and I'm marking it as bearish. Now, you can see again that these statistics are updating in real time based on the formulas that I've put in over here. So now I have to see, did this work or not? And the way I tell whether it worked or not is quite simply, when we get the close of that candle, did it go and tag the other side of the inside weak, i.e. 1 pip beneath this low, before it tags 1 pip above the extreme of the inside weak failure? And the answer to that is yes, because on this week here, it just broke the low of this original inside weak. So the result, win. Note that if you put anything else in there, like for example, yes, it doesn't work. Okay, it will say there, it's counted that there's an inside weak failure, but the probability of it working is 0, even though we know that it's 100% so far. Why is that? Well, you can troubleshoot by looking at the formula. Okay, let's have a look at that cell, which is clearly wrong, and it takes x10 divided by x8. So x10 is this. Is there a mistake here? Well, to work out whether inside weak failures worked, it's looking down this E column for the word win. But we've said yes, not win. So if we use the wrong word, it won't work. We change it back to win, it works. Now at this point, I'm thinking I'd like to know if there's a profitable strategy here. So now I'm going to look at the probability of inside weak failure working combined with the results in R and pips if I traded it in the exact way I just outlined. That's what we're going to do in this section here. I'm going to take the date of that inside weak failure pattern, which is the 26th of August 2007. We're going to put in distance to IWF extreme, and we're going to look at a prospective stop. So let's imagine that we get in on the close of here, the inside weak failure at 70.15, and we put a stop 1 pip beyond the high. The high is 72.72, so we put a stop at 72.73. We want to know how big that stop is, so we're going to do 72.73, take away 70.15, and that's going to give us 258. So we know that if we went in short on the close with a stop 1 pip beyond the high, that's a 258 pip stop. Now we want to know what was the result in pips if we get a winner out of that trade. And the result in pips would be the distance from the close to 1 pip beneath the low of the original inside weak. So the close was 70.15, we'll take 70.15, and we will look at the low, which was 68.26, and we'll go to 68.25. And it's 190. So we would have made 190 pips for a risk of 258. I haven't accounted for spreads here because spreads do change over time, and you can always account for them if you see something interesting. In the R column, all that we're going to do is we're going to put a formula, and the formula is going to be the size of the result, which is I12, and we're going to divide it by the size of the initial stop, which is in H12. If we press enter, it's going to give us our result in R. Now, as that's happening, you see that this is updating. We're a total of 190 pips in profit and 0.74 are up. Now, you change that to green if you want, for a positive number. But then if it turns negative, which we know it does later, then you can turn it back to red. Over here, we can see the cumulative tick P&L and the cumulative return on risk. And at the bottom, that is updating in terms of my equity curve. Now, what I'm going to do is I'm just going to close all of that, and I'm going to bring on the completed one. And at the end of it, it looks like this. Now, this is what I presented to you last week, but again, when I checked it today, I noticed little errors, and this is what I was saying at the beginning about needing to bear in mind that we are all human and that you will make mistakes. There's no major differences in the numbers I quoted, but I realized I missed 4 inside weeks. So actually, I quoted you 53 last week, and the actual result now from the second count is that there were 57. The figures are actually still pretty much the same. Okay, the probability of inside week failure working is pretty much 41%. The probability of breaking both sides in the same week is almost 25%, but again a little bit higher than what I quoted last week, but really not a whole lot in it. And these two figures here, the probability of closing beyond the extreme or failing to close beyond the extreme, are pretty much the same. In terms of pips and return on risk, it's actually even worse. But there's no real differences in the conclusions that we're coming to, and that's the important thing. So that's the process by which I go ahead and I collect statistics. And one thing I would say, guys, is that, again, and I can't reiterate this enough, don't take what I or anyone else presents as gospel. You do want to go ahead and double check things, okay? Especially if you're going to risk real money on these occurrences. To be fair, I don't often make mistakes, but again, I'm human. Humans make mistakes. Be careful. Do your due diligence. And also I notice sometimes minor little mistakes, like I wrote IDF here rather than IWF. I'm so used to looking at inside day failures that I was calling inside week failures inside day failures, even though I was measuring inside week failures. But that's a negligible mistake, really. So there you go. I hope that gives a bit more light on how I compile the statistics, and I'll see you all back here on Monday.